Let's look at the differences between external and then internal audit. So we shall start with the objective. The objective of an external audit is to enable auditors to express an opinion on the financial statements. Remember that external audit is done by external auditors, internal audit by internal auditors. So the objective of the external audit is to express an opinion on the financial statements, whether they're materially misstated or not. Then for the objective of the internal audit is to improve the entity's operations by reviewing the efficiency and then effectiveness of its activity. So this is to express an opinion, and the other is to improve on the entity's operation. Then the second difference, when we look at the scope, so the scope of the external audit relates to financial statements and financial records that underlie them. So for external audit, we are only concentrating on financial statements and financial records, nothing else. But then for the internal audit, it relates to the entity's operations, including things like value for money audit. Then the relationship to the entity, when it comes to external audit, external auditors are independent of the entity and its management, like they do the work on their own and they are not influenced by management in a company, and then they are appointed by the shareholders at every annual general meeting. Then for the internal auditors are often employees of the entity, although sometimes internal auditors may be outsourced, like they hire them from outside, but they are mainly employees of the entity. So meaning they are not independent from the entity. But for external auditors, they are independent from the entity. Then when it comes to reporting, external auditors report to shareholders in case of a company, then to parliament in case of a government or an equivalent body. Then for internal auditors report to the board of directors and the audit committee. So these ones report to shareholders or parliament, then the other one, board of directors or the audit committee. And then lastly, relates to fraud. External auditors have no responsibility to detect fraud within a client. Then the internal auditors helps management to fulfill its responsibility of preventing and detecting fraud. So internal auditors are supposed to prevent and then detect fraud. Then the external auditor does not have the responsibility to detect fraud within a client. So those are the differences between an external audit and an internal audit. Thanks for watching. Do not forget to subscribe, like, comment, share with your friends. Let's catch up in my next video.